Right, so apologies for this late start. I'm trading oil at the moment, so I just thought I'd kick off with oil. This is November lows I've just taken, well, close to November lows. The actual November lows are a little bit further down. So November lows were 72.30. I am currently in this position off of this 72.90. We're currently 73.80. So I'm just looking to see, I mean, cyclically, this is the time of the year when oil actually starts to build into next year. Normally, if you look at this period last year, um, it yeah, this time last year we were down here at 70.40 and moved into 80, and then we dropped out of here in March, stayed low until June, and then burst up. But so I'm just looking to see if we can pick up from here and push up, and that will affect my decision on oil stocks as well if this starts to work. In the meantime, this is just the 20-day average on here. So any market that can't get above the 20-day average is not worth hanging around for. But in the meantime, I'm just buying this support, seeing if we can close higher and pick up. Quick look at the dollar. I'm not, like I said, I'm going to keep it nice and sweet and short tonight. Let's have a look at the dollar. So the dollar is really picking up. But all the time the dollar was weak, oil was still dropping. So let's see if oil can counter this stronger dollar and pick up from here. It's certainly affecting the gold. We spiked up on the Sunday open, and here we are plunging right back into the price that we saw last Tuesday. So if this doesn't pick up, this is potentially toast. You, Gold does tend to do that. It tends to crank up and then just give up. We did that in May this year. We did it in, I think we did it way over here. Yeah, here's another example. In March 22, we shot up to a very similar level actually, and spent many months following that just drifting lower. So we need to be careful of the gold here. It's when the market is too overloaded with one side, i.e. in this case the bulls, it's not uncommon for it to shed like this. So let's just see where that goes. But at the moment, obviously, yeah, you can see the real decent pullback is down there at the 2000 mark. That's where the pullback to this trend line and that 20-day average is. So there was just a disconnect. We were too far off the mean average at those highs, and so that has come down. Quick look at NASDAQ. I've been tracking the Dow. I've not tracked the NASDAQ today, so let's have a look at what NASDAQ's been doing. Yeah, NASDAQ is already coming off. So we made new 23 highs and we're closing underneath them. So this is a real warning sign that it's early part of December. So we haven't got a lot of this year left really, in terms of trading, that is. 3 weeks to Christmas. Wow, today. So not a non-farm payroll on Friday. So if they drop it down into support down there at 15.5 and hold it, then we could pop back up to the highs. But we're definitely really struggling up here, so be careful. You tend to get, as the year peters out, you tend to get the US market selling some anyway, because that's as they realize profits ahead of the whole tax game. Okay, so let's have a quick look at a couple of my main commodities. Um, so we've got natural gas really coming off the boil. So that's very, if you're wondering why your bills are higher, because it stayed very high into November when all the contracts go into place. And soybeans have been on a run. They're dropping right off as well. This time of year, the grains just tend to react to the dollar. So the dollar's coming in for some strength. And there we go. The wheat has popped up from 5.5 to 6.2. Um, this I would think this would fall back again. At least I hope it does. Let's get my pen. Um, is this Yeah, we had a little this petered out last time we popped up. So if we can drip back to 580, which I think is realistic, I would then start to buy into this and hope that we can then get back up to these highs. As I keep Anybody who knows me well, you'll know I'm a huge fan of these commodities. Right, let's have a look at what is the oil is still struggling, as I see. Right, okay, let's have a look at the miners. That they upgraded this platform and um, they moved my watch lists to a different place, and am struggling at the moment. So bear with me while I just sort this out. Here we go. All right, Pan African had that nice move into 18.5, 19, and we're pulling right back. This is just a pullback zone. So if we can hold these levels here, come into contact with the 20-day average, we might go back up again. If gold doesn't survive up here, then this could be it. We could be in for a sort of head and shoulders, and there's an X line all the way down there. So I'm sticking with it, but just be warned. I suspect the other Griffin it's pushing up. Um, Rothschild still holding up after a decent run. Let's have a look at banks. Yeah, so Barclays is still pulling up out of here. And we're getting a nice potential head and shoulder pattern here. So this dip has got bought so far. If we close above this 145, then I think we could go back, start climbing up to 150, 160. So this is going to be a crucial area. Barclays needs to get above that. Right, let's look at the HL. Yeah, this is Andy's one. I think this is a good one. The volumes are improving. If we hold here and can close higher, I think this HL can at least go to 750. So I think any pullbacks to 7 on this one, which we tested that today, are buyable with a stop underneath about 680. Okay, right, moving on. Uh, let's have a look at Lloyd's and then let's have a look at Pro. Potentials pull right back into support. Volumes are picking up. So I think this is viable. Shoulder, head, shoulder. We've already popped up here. So we retested the breakout area. So if that holds, I think Lloyd's has got some decent room to climb next year. I would keep a very close eye on that if you want exposure to a good solid, well, a reasonably solid financial services outfit. Lloyd's. Oh, right, okay. That's really getting going. So any pullback now to 44 is potentially viable. What am I going to look at? Let's have a look at healthcare. I think this healthcare sector is picking up. I like Bristol Myers. Gap down here. So all we've done is just close the gap. So unless we close above this 52, 53, that may not work as well. But I like the sector. Glaxo, SmithKline, already on a run. So we talked about that at 14. That's now close to 1460. I like this one. Medtronic's gapped up. Okay. So that gap's going to close at some stage. So it's become a very gappy stock. Lots of gaps up here. Very gappy stock. It's got very ragged this year. And AstraZeneca. Yeah, that's got a gap down there. I think I like all these stocks, but just be careful as we get into the back end of the year. But so my strategy at the moment is to just have a few selective strong stocks, not the speculative stocks, and then keep it simple. Right, anything you want me to look at? Otherwise, I'm going to leave it there. Oil is not doing it. Oil is drifting. All right, so let's have a quick look. There is a couple I just want another look at. I've not tracked dark trace. Yeah, not going away at the moment. Right, okay, I'm going to leave it there. Thanks a lot for joining me, and I'll catch up with you soon.